Trust. For those of you who don't know who we are, my name is Chelsie Runnings. I'm with Better Homes and Gardens Real Estate, and my co-hosts, I have Darren Blonski with Sonoma Wealth Advisors and Mary Piasta with Haeuser, Valluzzo, and Piasta. And we are coming at you from Sonoma with a lot of stuff. Today we're talking Prop 19, mortgage rates rising, people leaving California, and Bitcoin. So, Darren, to start off, we saw some mortgage rate increases. I think it's safe to say that our historically low mortgage rates are behind us, although they've gone up a little bit, not significantly enough to make you not want to purchase a home. It is linked to what's happening in politics, what's happening in the Treasury. So why don't you take it and tell us what you're seeing?
Yeah, well, welcome everybody. Nice to be back. Hope everyone is safe and New Year's going all right for you. So really the big topic we're all talking about is stimulus, right? That's the 100-pound gorilla in the room. That it's more or less swamping out any of the geopolitical issues we're seeing, but it's also driving rates higher. And as you can see on the screen, this is the 10-year yield on the Treasury. This is one of the important demarcation tools we use to understanding how yields are performing throughout the economy. And you can see this really strong move. We were working this trend line up here for many months. And then we popped above the 1%, which was kind of the magic number psychologically. Markets love nice even numbers. And when we bumped above that, it sent the yields going up much higher. Now, keep in mind that the Fed is telling us and or telegraphing to us, just was looking at some headlines from Jerome Powell, the chairman of the Federal Reserve Board, that they're planning to keep yields low for a while. And what that means to us is that even if long-term rates float up, there's probably going to be some yield control going on. So they're going to be using mechanisms to hold down the yields because they don't want yields to go too high, because that will hurt the possibility of getting inflation, which we're also starting to see a lot of inflation in the economy starting to come through the cracks. And the way inflation works is we start to see little pieces of it and then it really pops. And so that's something to keep looking for, but you can see that the yields moved and they spiked up about above to about 1.19 and change in that range, and then we've pulled back down. I would expect to see yield curve control pressure step in. If we do get too big of a spike, it could be really detrimental to the economic functioning as it is today. As Biden might announce the stimulus today and talk all about this, I think, though, we're going to see that upward pressure with the Fed trying to push it down. So Prop 19, I mean, how could we not have another session about Prop 19? We've talked a lot about that in our previous videos. We've gotten a lot of questions from viewers. Chelsie, you were going to ask a few of the questions today from viewers. What are they asking?
Yeah, so we have two questions today. The first one, Mary, when you say gift, the option to gift the property before February 15th deadline, do you mean just adding your children to the title or deed?
Right. And this is such a good question. And the general answer is no. And I think that I want to circle back on this particular question to the overall framework of how this Prop 19 analysis needs to occur. And what I've shared with everyone here is the actual text of Prop 19. So when we look at Prop 19, we've got to start there. And so here's a good resource for folks to look at. And what this demonstrates is, first of all, kind of what the tone is going to be for after it's in effect. And that is basically the focus on changing the assessment basis for the non-primary residents. So really, what needs to happen in looking at this is not only looking at what property it is that people are looking to add kids onto or transfer to their kids, but what are the goals of that? What are the long-term goals of the estate plan? What type of property is it? Is it commercial? Is it residential? And then run the financial analysis that we have talked about in previous videos. And after you look at all that, you have to consider things like control. So what I'm hearing from lots of folks are, well, if I add my kids on, do I still get to control the decisions? And that's kind of more of a finer issue, again, depending on the situation and how to do it. So really what's important is that folks reach out to their advisors not act on anything they see in a video per se, but reach out to their estate planning attorneys and their financial advisors on this. The other resource I wanted to share as folks are navigating this is the Prop 19 resource page that my firm has put out, and we have a descriptive article here as well as a chart that explains what happens before and after Prop 19 goes into effect. So hopefully that sheds a little bit of light for everyone on that particular question. And thank you so much, viewer, for asking it.
All right, thank you, Mary. We have one more that we're going to do today. Are you ready?
Yeah, go for it.
Okay. Is there any way to keep low assessments and still get a step up in basis upon the parent's death? Seems like you have to choose one or the other.
Again, another really solid question. Thank you for asking. And sure, there is a way to do this, and that is if your parent dies before Prop 19 goes into existence. The other kind of more, I guess, snarky comment is to maybe consider leaving California.
A morbid option there, Mary.
I mean, it really is going to be in some situations one or the other. And that's what I like about this question. It sort of wraps it up. But, again, another one of our commenters said, hey, why not just leave the state? And I think that, in fact, there may be something to that. Chelsie, have you seen anything about that? People leaving California for various reasons or coming here?
Yeah, so two interesting things I just read. The California Association of Realtors just did a survey, and in December, 29.6% of sellers who sold their houses were leaving the state of California. So that's a huge number. I know we keep hearing about this mass exodus, and on top of that number, I also read that the population growth that California saw was not due to people moving to California. It was largely due to California residents giving birth. So that 29% is probably going to increase through 2021 with Prop 19, with people now you can, if you're 55 and older, you can go anywhere in California with your low property tax basis. But for everyone who's inheriting homes and is going to have to face these large tax consequences when they inherit these homes, why not just sell and move out of California now? I mean, we are seeing people who are moving to California who have more money maybe, and they can spend more on houses. We're also seeing a lot of people moving to resort areas. So although California had this great mortgage, because of the low mortgages, California saw incredible sales and real estate numbers going like crazy this year. But no places grew quite like the resort areas. And I'm talking like South Lake Tahoe, Lake Mammoth, Big Bear. They saw the most sales and the most price increases throughout 2020.
I guess it makes sense. Now, aren't there some other numbers that are going like crazy right now, Darren, that people are projecting with that little Bitcoin thing that you can't really touch, but you can watch grow?
That's right. So a lot going on with Bitcoin. This week was a big week for Bitcoin because we got a really strong correction coming out of it. And, that tends to send people onto the wires and say, oh, it's crashing. See, I told you it was a bubble, with a nice 28%, 0.4% correction from peak to trough on this correction. But guess what? Totally normal, totally expected. It's just more volatile than some other markets that people are used to, like the stock market, because right now we've now recovered 32% of that decline, and we're looking at all-time highs and potentially going to punch right through that high we saw earlier last week. We'll see if it makes it through or if it sells back off. You never really know. But I think what's always really critical is to make sure that we keep it in context. And so what's really going on is you've got this, and I'll pull up another chart for you here in stock. It's called stock to flow, right? So nice, fancy name, but there's something called a stock to flow. So Bitcoin actually goes through these cycles. They're called halving cycles. And Generally, the way to understand a halving cycle is that every so many years and we don't know exactly when, but we can kind of guess, the amount of supply coming onto market with Bitcoin gets cut in half. And when it gets cut in half, that constrains supply, and there's a finite number of Bitcoin that can ever be mined, which is 21 million. So as supply gets cut and we get closer and closer to that 21 million, naturally supply and demand forces take over and the price of Bitcoin goes up. JP Morgan Chase came out last week or 2 weeks ago and said, hey, guess what? We think Bitcoin's going to be 149,000 per coin. So when we see it at 40, and those who watch it, those who pay attention to it, those who understand the mechanics and the math behind it, we're not surprised to see these numbers like 40,000, nor are we surprised to see huge corrections of 30% as it's on its way up. That's a very normal process for Bitcoin. So you're going to be hearing a lot about this on CNBC, on the different Bloomberg, other financial, probably even make its way onto prime time with CNN, Fox News, MSNBC, all those. But the bottom line is you should, as long as Bitcoin stays doing what Bitcoin usually does, you're going to see more price appreciation out of it. Now, I'm not saying that to say there's no risk there, because there's a lot of risk. Case in point, the UK government came out last week and said you can't deposit Bitcoin profits into their banks. So there's always that headwind that's potentially there and could impact your investment. So like always, you should consult with a licensed advisor prior to making any investment. And there you have it with Bitcoin. That's the story. Lots of fun out there. Lots of price movement.
Well, before we wrap it up today, I just wanted to make one little comment. I know I said mortgage prices were increasing, inflation's increasing, we're seeing numbers go up. When I say mortgage increases or mortgage interest rate increases, I'm not talking like we're at 8% or anything crazy like that. We ended December with a historic low of 2.6%. We are up today to 2.95%. So an increase. We're probably going to hover around 3%, 3.25% through the rest of 2021. So although we are seeing increases, these are still historically great mortgage rates.
Well, that's especially true if we get a lot of inflation, Chelsie, right? If everything else starts inflating and rates stay really low, that's going to further propel inflation. And you're likely to get some yield curve control. I mean, the Fed's telling us that they're thinking about this, they're understanding this, they're trying to get their head around it. So I'm not in the camp that rates are really going to shoot higher. I think the Feds are going to hold it.
Well, there you have it, guys. That's it for us. Mary, do you want to end us with our disclosure?
Yeah, so we really enjoy you guys watching us and tuning in, liking and subscribing to our channel. However, of course, all this is for informational purposes only, creates no professional relationship between the viewer and one of us. But have a great day, and we'll see you next time.
Take care, everybody.